Given the recent market sell-off that's been taking place, I thought I'd take the opportunity to talk about what investments I've recently been making in my high-yield dividend portfolio. In light of lower interest rates, concerns about an AI bubble, and also concerns about a recession, I'll just discuss what I've been purchasing this week in my portfolio. And I'll also show you how much I've been buying of each position. As always, be sure to do your own research before making any investment decision, as some of these positions are higher risk than others, and some come with bigger tax consequences. So with that being said, let's get into it. The first investment that I've been buying more of recently is ticker MPLX. I recently bought 10 additional units of this holding at a price of $50.77 each. This is a master limited partnership that owns and operates midstream energy infrastructure and logistics assets. They're involved in the gathering, processing, and transportation of natural gas, as well as the gathering, storage, transportation, and distribution of crude oil and refined products. Because this is a master limited partnership, holding this position will result in you getting a K1. This is a tax form that you get whenever you invest in an MLP instead of your typical 1099 DIV, and you're required to file it with your income taxes. Whether you go to a tax prepper or you use software like TurboTax, they always charge more for handling a K1, so do your research before considering one of these investments. It's also ill-advised to hold MLPs inside of a retirement account. But if you are willing to handle the tax consequences, then master limited partnerships are really great investments. They're one of the best categories of high-yielding investments when it comes to offering both a high yield and dividend growth. Business development companies do offer similar yields, but nowhere near as much growth. In the case of MPLX, their units currently come with a yield of nearly 8.5%. They've never gone through a dividend cut in their 13-year history, and they just announced a major dividend increase. On October 29th, they announced that they'd be raising their dividend by 12.5%. It's very difficult to find something that's offering this high of a yield and this level of dividend growth without any cuts. What's even better is 12.5% annual dividend increases are going to be their long-term goal going forward. Unlike other oil stocks and other oil companies, MLPs are less impacted by oil prices when it comes to paying distributions. They aren't like royalty trusts, whose dividends depend on the performance of oil. In their latest earnings, MPLX reported that their dividend is over 130% covered, so another good sign that their dividend is currently secure. So overall, despite the tax burden that exists with this, MPLX has become one of my favorite dividend investments, and it's currently my favorite energy holding. The second investment that I just bought more of this week is Hercules Capital, ticker HTGC. I just picked up an additional 29 shares of this stock at a price of $17.70 each. Hercules Capital is a business development company that provides venture lending and specifically focuses on making investments in the life sciences and technology sectors. If you're a BDC investor, you're well aware that the market has been fleeing these kind of companies. Since early September, shares of most BDCs have been falling over concerns of interest rate cuts. And although I think the possibility for a higher amount of dividend cuts in this sector than normal is very much possible, there's still very strong BDCs out there. Hercules Capital is currently one of those companies. They're one of only a handful of BDCs that have been around since the financial crisis, and they have a long history of growing their dividend and providing NAV growth. In their most recent quarterly results, which they just reported a few days ago, lower interest rates haven't had any impact on this company so far. Their quarterly dividend was left the same as their previous quarter at 47 cents per share, and they also paid a bonus dividend of 7 cents per share. This was also the same as their previous quarter, so far they haven't even felt the need to lower their special dividend. In fact, according to their earnings, their base dividend is 122% covered, which is a really great amount of coverage right now. Their undistributed earnings spillover increased, and I think what also surprised some people was that their NAV also grew compared to their previous quarter. I know that BDCs have really only had to deal with one interest rate cut so far. The one from last week likely hasn't had any impact on anything yet. But as I talked about in a video last week, the number of articles and the number of people talking made it sound like BDCs were already going to be pushed to the limit. But as we're currently in the middle of the BDC earnings season, none of the big name players in this sector are feeling the heat right now. And what's even more encouraging, at least for these kind of companies, is that the Fed indicated that they might not be in much of a hurry to reduce rates as they initially indicated. With all that said, even though this stock is still overvalued by all the typical BDC metrics, I'm really just fine with earning more than a 10.5% yield on my money with a holding with a dividend this well covered. Another stock that I've been buying more of recently is Triple N REIT. I recently picked up 6 additional shares for my dividend portfolio, so not too significant this time around. From a dividend perspective, it's one of the safest investments in my portfolio. And because of a recent dip in share price, it's offering a dividend yield of well over 6% and it provides consistent growth. So although it's not nearly as exciting as other holdings I typically talk about, right now Triple N is a lot more appealing because of that higher than average yield. It's one of the few positions in my dividend portfolio that I really rely on for growth. Triple N REIT is a company that owns a diversified portfolio of single-tenant net lease properties. They hold everything from car washes to automotive repair centers and convenience stores. Triple N REIT has one of the best track records when it comes to growing their dividends. They've increased their payout every year for 36 years and counting, surviving the financial crisis and COVID without cutting it or even pausing their growth. They released their Q3 earnings earlier this week in which they beat expectations. Triple N announced that their investment activity is currently at an all-time high as they're seeking to expand faster than they previously have. They also raised guidance for their full year, which indicates their earnings this year have been much better than they anticipated. In Q3, they earned 86 cents in AFFO per share, which is a 2.4% increase compared to their previous year. This gives their dividend a 70% AFFO payout ratio and is even better covered than their previous quarter. The majority of these diversified REITs typically like to keep their payout ratios between 70 and 80% to be conservative. So Triple N REIT is at the lowest end of that range, which is really good. One of the only things that I've seen some people raise concerns about is their occupancy, which is currently at 97.5%. It has been trickling down over this past year. It was 98% in their previous quarter and 99.3% from this time a year ago. It is something to keep an eye on, but we just saw that this falling occupancy hasn't been anything to worry about at this point because their dividend is still so well covered. So that's just a quick look at what I've been buying this week. I bought a couple of other holdings, but these were some of the largest individual companies that I purchased. Let me know what you guys think. Do you hold any of these companies, or do you think there are better alternatives out there? Feel free to share your thoughts, and again, conduct your own research before investing. But with that being said, that's going to wrap up today's video. If you'd like to connect with me and see what's inside of my own high-yielding dividend portfolio, then feel free to check me out over on Patreon. You'll be notified when I make trades and you'll get access to our Discord with other high-yielding investors. Thanks again for watching. Please be sure to like this video and subscribe if you want more high-yielding investment content. Thanks again for watching, and I hope you all have a great day.